I'm Greg Hunter. Welcome to USAWatchdog.com. With us, an old regular, actually he's a friend of mine, and we talk on the phone all the time about the economy. And boy, was the line busy last week with the revision to the GDP up to, 4.6%, and then the terrible durable goods number. And I have on with me the man from TradersChoice.net, Gregory Mannarino, coming from Las Vegas. Greg Mannarino, thank you for joining us once again on USA Watchdog.
Greg, it is really, really great to be with you again. Thank you for having me.
Well, let's start with Crazyville, how great the economy is with, I think it's 4.6% revision upward, not 4.6%, but up to 4.6%. And then you look at you called me the day before with the durable goods order. What is going on with the numbers? Come on, the economy is not blasting off like they would like you to think. What do you think's going on?
What do I think is going on? I think they're gonna pull anything out of a hat, like I've been saying. They're gonna twist this thing. They're gonna manufacture numbers. It's impossible for this to be happening unless there's one thing going on here. But let's just talk about, what's in our faces here. We understand that we are clearly in a housing slowdown, a major driver of the economy. But, they won't admit this. They won't talk about it. They kind of, try to shine the light over here. No, look over here. Don't look over here. Look over here. This is always the same story. But, we have a government that has grown into a monster. So all this government spending, that's going to be part of GDP as well. But as for our economy, we're not doing anything. We know this. We're going nowhere fast, Greg Hunter, and everyone else listening. And, I always tell people, all you need to do is look at two metrics, just two, and you can see there's no economic recovery. We can just cover that just super quick. One of them is the money velocity, the rate at which cash is moving through an economy. We're at historic lows here. We have a labor force participation rate at an over 3-decade low. So please, anyone explain to me, unless I clearly don't get it, how we can have an economic recovery without those two simple metrics. Now, you want to throw in the durable goods orders? We can look at that too.
Well, was it one of the worst or the worst? It was terrible. Tell me about that.
It was the worst since they've been recording this. Fell off of a cliff here. Now, exactly. So put this all together. Does this add up to a GDP which seems to be going on like gangbusters? Of course, it does not, Greg. But again, they're going to do things to prop this dollar up. And you and I understand this, and I'm more than certain that your listeners do, with regard to bringing us to war, more spending on the military, on equipment to fight this new war. This is all going to be added to GDP. So what's it going to be next time? 25? They'll just do whatever they need to do. Again, it's interesting to watch how this is playing out here. We had last week, we had a hardcore sell-off in the market after that durable goods order. And the next day, all of a sudden, we get this miraculous upward revision in GDP. And what did that do? Pushes the market higher. That's their only concern right now, is pushing the equity market higher to foster the wealth transfer that we've been seeing since the beginning of quantitative easing.
So when you have this, you think all this is all about to make the U.S. government, the dollar, look good, as opposed to the economy tailspinning and crashing. And you're saying that the war is just really more about, at least on the U.S. side, about propping the dollar up and revving the economy up. For the heck with the debt. It's because there's going to be a big debt to this.
Oh, of course. Again, the debt doesn't matter. That's why they can't balance a budget. We haven't had a balanced budget in X amount of years. I have no idea how long it's been. Again, all they're determined to do here, Greg, is hyper and super hyperinflate the debt bubble. Because again, this is the foundation of our economic model. It's a debt-based economic model. It demands that cash be borrowed into existence in perpetuity. It cannot stop. Once we stop, once we admit that we have a debt problem, implosion time. And they're going to look for every single excuse or reason to borrow this cash into existence. For example, they leave the border open, the southern border here. Why? So they can go give billions away to South American countries, and Obama can ask for billions more to house refugees, whatever you want to call these people. And now this war. Look, this whole thing with this new war, they waited for the right time to do this. They sold this war. They waited for the beheadings to happen so, they could get the American people behind spending more. It's all this is about. It's about spending into oblivion because that's where we're at. And again, this is hyperinflating that bubble in debt, which is parallel the population boom, creating a human bubble. It's very dangerous. In fact, it's the greatest threat to humankind, period.
Well, you said that we hit new all-time high after new all-time high, and that's what we've been doing. But even people like, mainstream Larry Summers, the former Treasury Secretary, and also, Obama White House economic advisor, Larry Summers, talked about how the stock market was more bettered value, or what was his quote?
Oh, okay.
And what do you think what do you think he's trying to do with talking about how more valued or I don't remember the quote, but tell me about Larry Summers' quote and what do you think he's trying to say?
As a matter of fact, I actually talked about this in one of the videos I did last week, as well as an Insta blog I did. Larry Summers, former U.S. Treasury Secretary, world-renowned economist, he comes out stating, and this is a quote, that it is without question that stocks are more, here's the word, fully valued, more fully valued than they were 18 months ago. So what he's trying to say here is that the stock market is overvalued, but he can't say that. He can't come out and say it's overvalued because it would affect market sentiment. And again, what would that do? That might allow the free market to do its sole job, which is to determine fair market value, and the market would become more fairly valued. Then you got the talking heads on the financial channels saying, valuations, they're good. The stock market's okay. So, who's right here? Obviously, I am siding here with Larry Summers. I understand, and I'm sure you do, and everyone else.
You're not saying
this market
more
is grossly overvalued.
You're saying flat out it's way overvalued. Are you changing your tune? A few months ago, you said new all-time high after new all-time high. And now, is that what you're saying now, or are you saying look out below, run for cover?
I'm saying that the market is still going to go higher here for several reasons. We understand what happened with the ECB just recently. They're going to be, the European Central Bank will, without a doubt, in my mind at least, be instituting full-on Federal Reserve-style quantitative easing. They're already halfway there, Greg. They're buying assets from the banks. We know this. They have negative interest rates. Does this sound familiar? Again,
they're breaking their own treaty. That's against their Maastricht treaty, supposedly. But I guess they can just do whatever they want to do.
They're going to do whatever they want to do. Now, the Federal Reserve is – see, the Federal Reserve –
Let's back up here. Let me ask you a question. I'm sorry.
That's fine.
You're a lot smarter than me. So you're saying that the economy is going to ramp even higher, that instead of Europe imploding with these Russian sanctions and Russia is looking at ways to, confiscate property. And, there's a lot of corporate property from France and Germany and the UK and all over the EU, and a lot of people doing business in Russia. They're talking about confiscating property in retaliation for sanctions put on them by the United States. McDonald's Corporation has, 400 stores. But anyway, you're saying that they're going to try to counter these measures by Russia by printing money?
Without any doubt, this is exactly what they're going to do. They're not going to allow the economy to falter anymore. Mario Draghi came out, and he keeps using these same words. He'll do whatever it takes to boost up business sentiment. Business sentiment fell to like a 5 months of consecutive falling. So, again, this is what they're going to do over there. That's going to push the equity markets higher beyond any shadow of a doubt. The Federal Reserve is not tapering. We know this. We can see this being reflected in the bond yields. They will be instituting something else as well to keep this propped up. There's no doubt. And war is part of it as well. War is part of the mechanism of propping this entire thing up. And it's going to get much worse, Greg. There's no doubt about it. Anyone out here has to realize what's going on here. Again, this is a scramble for resources. This is going to get much, much worse on a global scale. And we're witnessing, again, what you and I and many, many people have been speaking about for a long time, which is the decimation of the middle class here, a two-tier society that is being created. This is going to span the globe, unfortunately, Greg. And I think it's going to get worse. But this does not mean the equity market isn't going to go higher here. They're not done. They need to keep continually pushing this higher to again foster this wealth transfer away from the middle class that's already being robbed here in the United States through negative interest rates. Anyone with a savings account or an interest-bearing account is being robbed. Where's that wealth being redistributed to? The upper echelon of society through the mechanism of the U.S. equity market. It's very incredible.
Thank you for explaining that. Very good. But here's my question back to Europe. What's going to happen when they just don't get natural gas supplies? What's going to happen when the price goes up? Draghi's just going to print tons and tons of money. And what happens if Russia says, yeah, you'll be paying us in ruble or yuan or gold? Yeah. What happens then to his money printing scheme when Russia cuts the gas off and or raises prices to 50%, 100%, 200%? What happens then? War.
We're going to global war, Greg. This is the next step here. I wrote about this in my book, The Politics of Money. It's the natural progression of where they're taking us now. And this new war we have here in Syria and Iraq, this is going to get much worse here. China and Russia have been angling themselves against the United States for quite a while. I cannot imagine a way out of global war. Putin is not done over there. He wants more of the Ukraine. He is going to get it. Again,
I mean, we want war too, right? I mean, that's what they're doing. The ISIS, they let them grow, and I mean, who should get fired over this? I mean, all of a sudden it's like, oh, we got to arm, Al Qaeda. I mean, moderate rebels, and they grew unbelievable. I mean, what happened when they were taking Mosul and chopping off heads, months ago when the Iraqis were begging for us to bomb them in January? I mean, of this year. I mean, who should get fired over this? I mean, all of a sudden, Shazam, we got a 35,000, 40,000 man army with tanks and rocket launchers and mad pads, and nobody saw this coming?
Of course they saw this coming. They needed to let it build up to hit a critical mass, to allow the American people to kind of sort of back this thing by publicizing the beheadings, talking about the dastardly acts, the crucifixion of children. This is what they needed to do, to sell this war. It's always the same mechanism. It's always the same thing. They sell the people. They pull the people into this, and they're going to continue to do this. This is, again, a dollar propping up mechanism. It really has to be understood for what it is, unfortunately, and it's not going to end well. It's going to end, and I think we're at the very, very beginnings here of global war. And again, just look at the alliances that have been created between nations around the world. You got Russia, China, and the Middle East, and then we're standing here with our little, we're not going to get ground troops involved here, which we know is nonsense. They're there already. I have sources who have told me this. I've discussed this with you guys on the military side, so they can say whatever they want. It's all not true. They're going to twist this and try to force feed lies to whoever will believe it. And that just goes back to the premise that the bigger the lie, Greg, the easier it is for people to believe it.
Then I want to end up with gold and silver. A lot of people, well, he's a trader. He just gets paper money. But I know you've said this many times, so I'm not disclosing anything personal. Your finances, that you trade and you go out and buy more gold and silver coins or bars or whatever you're buying. You go out and turn some of your winnings, your profits, your trading profits into physical gold and silver. Are you still doing that? And do you recommend other people to do that, and why?
Greg, right now, and I've been talking about this recently, we are well below the all-in production cost of physical silver right now. What does this mean? This honestly has to be the greatest opportunity as an investment vehicle, silver, in the history of the world. How anyone cannot understand why this is a great opportunity right now is beyond me. If you can get any asset, I don't care what it is, below production cost, a car, a house, whatever, you should jump all over it. Well, this opportunity here is very much in our faces. There's something else very interesting is going on here. We're seeing almost identical price action with regard to silver that we saw 1 month prior to the crash of Lehman Brothers in 2008. That means something may be lurking here on the horizon, Greg. There's a lot of things that are going on here.
You have some of your Wall Street buddies that you are in good contact with that have given you some inside information on this too, right? They're saying the same thing that you're saying.
Well, it's interesting. Someone actually brought this to my attention, and then I just made charts. You know me, I like to make charts. I put two side by side, and I went, oh my God, this is, what does it mean? Is history going to repeat itself again? We understand there's a lot of shady things going on here, so anything can happen here.
So
keep your eye.
Hold on.
Yeah.
So the chart leading up to the Lehman crash in '08 looks just like the chart right now.
It looks exactly like it, Greg. As a matter of fact, I wrote an article on my Seeking Alpha Insta blog. Anyone can see it. The charts are right there. It's uncanny how similar they are. Now, I don't know if this is saying that something out there looks ominous, but, it very well may mean that. I don't think longer-term charts here are looking too promising to me here. I always look at these projections here. And going out October, November, it's very possible. And I'm not saying this is written in stone here, but I'm just saying people need to be cautious around that time.
For stocks or for gold and silver?
Say that again?
For stocks or for gold and silver?
Oh, no, for the stock market. The stock market, it looks like a financial event might be lurking here, which could put a lot of pressure on equities. If that does happen here, again, we'll have a sell-off in the debt market, we'll get pressure on equities, and that cash does not just go to money heaven. It will go into other assets. It will go into suppressed assets. And there are none more so than gold and silver. Silver specifically being below production costs right now.
Gregory Mannarino, my buddy, I just feel like we just had our phone conversation, our long conversation that we have all the time on the phone. Really appreciate you coming on and enlightening us with your analysis and your trading. Really appreciate it. Gregory Mannarino of TradersChoice.net. Greg, thank you for joining us today on USA Watchdog.
Thanks for having me, Greg. Appreciate it.